Hello and welcome to another BW Dialogue. We are talking to Mr. Prabal Basu Roy. Post the budget, we spoke to him pre the budget. Looks like he's got a lot of those right. He said it's a budget which will have continuity with change. And I said, that sounds oxymoronish. So let's talk to him about where is the continuity in the budget? What is the change in the budget? Welcome, Mr. Roy. Your opening comments. How's the budget? Uh, what does it say? What is the signaling it's trying to do? What is the political messaging? What is the message to the industry? What is the message to the startups? What is the message to the housewife? What is the message to the middle class?
Thank you, Anurag. Thank you very much for calling me. Well, as we said yesterday, oxymoronish, but continuity with change. And I think that's what she's delivered. I mean, if there's one headline which I would like to say about this budget, I would say it's a catalytic budget with fiscal prudence and macroeconomic stability. I think that to my mind will surmise everything. I think, you see, the long-term direction has not changed, and that is probably the most crucial thing which all of us were looking for. The long-term direction has not changed despite political and election-related realities. So long-term direction has not changed, and most importantly, I think, given the macroeconomic stability which it has signaled through a fiscal 4.9%, I think a rating upgrade is possible for India. I think it is round the corner in the next few months. And I think, and that to me is the biggest takeaway which I can think of. We also said yesterday, in line with our chat yesterday, we said the focus would be on farmers, youth, women, and poor. I think she's delivered on all of them, from the agricultural, rural-related demand creation initiatives to infrastructure, to jobs, a tremendous focus on jobs, MSMEs and women. I think she's played it to the script there. It has been at a high level. I think it has been a little disappointing on the long-term tax direction, though, especially for the stock markets. Tinkering with the capital gains, long-term capital gains, which will not deliver more than incremental 3,000 crores at best, was perhaps not a signal which was necessary for us. I mean, for such a small amount. And the level playing field between FIs and domestic investors could have remained the same. And could have been changed to make it a level playing field, actually. So I would think that issue is there, but thankfully the corporate earnings has not been hit. I mean, there's been nothing in the budget which will affect corporate earnings. So the fundamentals remain very much intact. The tax has gone up a bit in terms of direction. So whether it was worth it or not is a moot point. So in terms of continuity, I would say fiscal prudence, macroeconomic stability, government capex as an expenditure multiplier, they continue. And change, I would say, was the calibrated targeted interventions, towards...
and we'll come to those.
Yes, we'll come to that, towards specific sections, which is women, youth, farmers, and poor. I think that was good, actually. I think it's necessary. And localized state-level initiatives like Bihar and Bihar and AP. Well, that is to do with the politics part of it.
Also,
and unfortunate, yes, correct. And unfortunate tinkering with the tax direction is a change which could have been avoided. I think that in a nutshell is the big level picture.
Good. So also the finance minister started by saying India is the ray of hope in an otherwise bleak economy across
Correct.
the world.
Correct.
Consumption slowing down, other bottlenecks in other parts of the world. So clearly, what she's done today will only add to India's position in the global business.
Yes.
Getting better. In my own view, also, it's a good budget because really it's a statement of accounts. So there is if you want to keep the direction, there is a less leeway in terms of what you can do. But in terms of putting the intent of the government, the focus of the government, and the resources of the money of the government, I think the finance minister and the government have done a good job. I would give it this budget 9 on 10, if not 10 on 10, because budget has kept to the fiscal prudence and in certain areas really been forward-looking. And we'll come to those. Now, let me start by asking you, we talked about investments, and as a corollary, we talked about jobs. So the focus was a lot on creation of jobs, internship, opportunities. Prime Minister also in his post-budget address talked about how he wants to enable the SME ecosystem and the climate of entrepreneurship. So let's focus on, do you think in terms of doing enough to create jobs, the budget comes up trump, or what's your view?
Yeah, okay. So Anurag, as I said again, as we discussed yesterday, the political messages from the elections needed to be taken. And I think the government responded in that. Of course, it's a moot point that it responded because it has coalition government or not, and I don't know. But the political messages have been taken, and that is a very positive for me, actually, because that is important. And what were the political messages? We said the biggest political message was inequality, the growing inequality. And that has been addressed, and that is a result of jobs, demand creation from the lower and middle income groups. Essentially, these two things. If these were handled, much of the inequality would get addressed over time. So on both jobs and demand creation for the middle and low income groups, I think they have done enough. And within that, jobs and skilling within the private sector, I think they have acknowledged that the skill development mission has been a failure, which was set up many years ago. And to link it with the economic survey where they said the private sector must step up, I think this is part of the move to rope in the private sector, tacitly accepting that the government-related skill development is not working. So now give them on-the-job internships and make it part of your CSR. So there's no incremental hit per se on private sector balance sheets, and yet they will get the benefit of people. So it's an incentive scheme, and I think it's quite a good incentive scheme, actually. I mean, as long as you recruit the right people with the right skills and basically skill them, I think that's a very smart move. And so this was the direct response. And along with the most concrete thing I found was the MSME financing. Yeah, I mean, this government has done this before.
Employment, skilling, SME, and middle class.
Middle class, yes. So these two are very concrete. Companies will be able to attract people and make them interns and all of that. And MSME financing through Mudra loans and other methods of doing it is something which we have done during the COVID time and done it very successfully. So that is something which I think is very concrete and will be done well. I don't think there's any risk in these two things, actually. So pretty good, yeah.
And even the Prime Minister said in his speech that the budget will open opportunities for young professionals to train with large, good companies. He said that very explicitly. Now let's take budget and the middle class go hand in hand. And the one question for the last 25 years that was there enough in the budget for the middle class? And the Prime Minister also referred to the new middle class that has been created because of India doing well, the economy doing well, the incomes growing. So he talked of a new middle class.
Yes. See, there is no doubt that a new middle class is getting created. I mean, with the financialization of the economy in particular, it is getting created. Now, with the focus on jobs, I think that will get more fructified. Today, that middle class is dependent to a large extent on what they do on the stock markets and things like that, which is we all know is ephemeral. So they need real jobs to actually do that. So there was enough in the middle class in terms of all these things which I mentioned, with youth, women, farmers, and poor. I mean, this is the basic thrust area of the government. And they have taken so many steps, including reduction of taxes to a degree. For women, the fund which was created for 2 lakh crores, I think will go a very long way in bringing back, in addressing another issue which I have also spoken about, was that the women participation in the industry, in the economy, has gone down to something like 8%. I mean, from 20% in the past. So, those things, they have taken cognizance of that. And the steps, which at least in the budget is there, and I'm sure it will get implemented, are pretty encouraging in that regard. Yes.
Okay, now let's talk of MSMEs.
Right.
What was in it for MSMEs? They're the backbone of the country. They also create jobs at entry levels. So was there enough for MSMEs? I'll come to startups. Of course, there is the abolition of the angel tax, which was a long pending demand from the startup sector and investors and angel investors. But what about the MSME?
MSME, I think the approach which was taken post or during COVID or post-COVID or in that period, which is essentially we will not give them handouts, but we will give enough credit, easy credit.
So the loan amount
has been taken. Mudra has gone up. Yes. So I think that is actually the right method, and that has worked actually to a very large extent. It has helped us during the COVID period in a way which no one in the world did, frankly. And that's why we are far better off today than given mere handouts. So I think the damage which was done during demonetization on the MSCs is now showing a curve up. I mean, hopefully with Mudra loans and more opportunities coming up, more investment on infrastructure, which will trickle down to MSMEs for implementation. All that, I think, is working in the right direction. It might take a couple of more years, but I think financing is the right way to go. Easy loans and financing, yes. Yeah.
Now, one of the sector that was a little upset with the Modi second government was the agriculture sector, the Kisan, the farmer, the rural economy, and the rural economy. And again, right up front in the budget was that we want to improve the lot of the farmers. So what has been done on pulses, what has been done for, shrimp growers. So agriculture was a big focus item in the budget. What do you have to pay for that?
I mean, those particular areas are not something which I'm very conversant with personally, but obviously she went down to micro level details to figure out where the problems were. So like you rightly said, shrimps and oil seeds and pulses, which are the mainstay of farmers. Plus, there was something on the logistics part of it. So the outlay for the rural sector has been very large. So there is, I think, agricultural demand plus the fact that they're also looking at affordable housing, which is not fully agriculture, but agriculture and middle class. I think these two by itself will be great propellers for the next year. Yes. So farmers have got, and I'm glad in a way that it has not been just a handout, because that is what creates a problem. So this is all changing the fundamentals of how the business is done at the local level. So there is a lot of focus on that. Yes.
Now let's come to why is the stock market down?
Well. Stock market, I can go on and on, but I think it's interesting stage. See, there were many aspects of the stock market. The first was, I think, the futures and options part, which was a big issue till yesterday, right? I think they got away very lightly with, as many had thought about bans, etc. But as we said yesterday, that is improbable in my mind, and I think they've got away lightly with a small STT increase, which I think is fine. Because the expectation was very dangerously change the FNO from business income to speculative income with no carry forwards. I mean, that would have been a death knell for the tax direction as well as for the markets in terms of F&O trading. There was question of higher taxes. That didn't happen, for the F&O part. So the F&O part, I think, has got away easily. And that's why the market recovered. Mind you, I'll come to that. See, the market sold off because of the LTCG. Essentially, the LTCG was, in my mind, not a step in the right direction for the small amount of benefits, which, unless they are signaling, which probably is more true, that by the next budget, the 12.5% will go to 15%. Because 12.5% means nothing, actually. It's either 10 or 15. What is 12? So maybe it's a transition path which is being signaled as far as long-term capital gains is concerned. So that, I think, when you decided a long-term direction on the taxes, certain things should not change. STT came in because LTCG was made zero, etc. So we have been progress. So that is an area where, but the good part is that the corporate earnings have not been hit, as I said earlier. It has not been hit. So the fundamentals of the economy remain the same, of the corporate sector. So what will drive the stock markets probably will remain the same. It is only the tax element which has been tinkered with, right? So, as far as participation of markets will continue, I think it will continue, as the story for generation of capital gains has not changed. What has changed is the tax element. So I think, but we must also recognize, and the government must recognize this, that the relative attraction with respect to Indian markets for FIIs is gradually coming down. That's something which we'll have to recognize. And let me give you some figures for that. FIIs in dollar terms have made about 7% roughly in emerging markets, in various markets. US has been 15%, which has been an outlier. And India has been an outlier at 12%. So let's say the average would be around, for lower markets, would be around 9% or so against our 12%. Now, that gap is only 3% in dollar terms, mind you, worldwide. So in a situation where you're taxing capital gains more and more, that gap of 3% is narrowing. So we have to be cognizant of that, because FIs pay no capital gains worldwide, right? So this is something which the government, I think, should take care of. They should understand this, that this is counterproductive. Just for 5,000 crore rupees, you don't tinker with that. So markets will not fall much, is my take. It has recovered today. Mutual funds have a lot of cash. SIPs are booming, and SIPs and the retail investor are bringing. So it's a liquidity-driven market. So it will not fall too much. Financialization of markets will continue. And importantly, the demat accounts as of March were 151 million, right? We still have at least 500 million to go. So this entire financialization theme of the Indian market will not change. And there's enough space and more to grow. So net, I would say the markets will recover and they'll carry on. They'll carry on. Though a bit disappointed on this capital gains thing. Yeah.
Now let me come to, in the way for the first time salaried professionals, there's an exemption, and there is a push to be able to reward people who adopt the new
tax regime.
What do you have to say to that?
See, the direction of the government was clear for the last 3 years that we are going towards the new tax regime. The reason it was not done immediately was because, at least for corporates, for the large players, was that there are a lot of carry-forward losses which remain in the books. Carry-forward losses and investment-related deductions, like investment allowance, etc. A lot of stuff remains in the books. So corporates needed a time period by which they could transition out. So that was the reason it was not done initially. So it's already been 2-3 years. I think another couple of years and it will be on the new tax regime, which is much simpler, which is a step in the right direction, by the way. I think it's a step in the right direction. In our family accounts, for example, we have there are 5. So all 4 of them we have transitioned out because it's making more sense. There's one which we still have, and which will move out shortly. So I think that is the right direction to go. And yes, 100% will be on the new tax regime in the next 2 to 3 years, which will be towards the simplification of the tax overall overarching theme. which the government is driving towards.
Thank you so much, Mr. Roy. I want to ask you two more questions. So, agriculture was a big thirst, jobs was a big thirst. He also said women right up front as a big thirst. Tell us, in terms of, and women are a large workforce, some way, Modi 3.0 is also because a lot of women voted for NDA and Prime Minister Modi. What do you have to say? And, women is also the Grahini. She's also the housemaker, the housewife. How's the budget for the housewife?
See, the whole thrust on the housewife has two parts. One which works in the formal sector and one which does not work in the formal sector, but both work in any case all the time. So as far as the reduction in taxes, etc., is concerned, it directly helps household savings, obviously. But as far as the 2 lakh crore which was kept aside for women in terms of bringing them back into the formal workforce, I think that's the first time something like this has been done. It's a large amount. It will help in creating businesses, etc., for women, etc. So I think it's a very good step. And the government has taken, as I said earlier, cognizance that women in the workforce, the number has come down drastically for India. Which is obviously unproductive. So they're doing things to bring them back into the workforce, etc. After the normal cycles of childbirth, etc. All of that. So very good. Yeah, good steps. The implementation has to be seen, but very, very good steps. Yes.
Now, let me also bring in Arjun into the conversation.
Capex was exactly in line with what you had predicted, that you won't see any increment.
Yes.
And it was flat right there. So what does it tell you about the future increments? Will we see some plateauing from here after?
Well, Arjun, see, 11 lakh crore is a very large amount.
Right.
And the reason I said yesterday that there will be no changes because there's simply, from whatever I could see of the finances, there is no way to do it. Because they have so many competitive pulls and pressures that I don't think they'll be able to manage that. That's the reason I said it. The other reason is that execution capability is also a question. And don't forget, we were on 5 lakh odd crores few years ago, and even that couldn't be spent. So even 11 lakh crore, when we transition to that amount, there's a large issue about execution capability here as well, beyond a certain number. So I think 11 lakh crores, yes, will be a plateauing amount if you would like. It will remain steady. It will not go up too much or too down. And the other thing which I think no one has sort of spoken about yet, I think, is the fact that should we require more funds on the infrastructure to push government capex? See, a lot of institutional funding is still off balance sheet, which is available, which is with NHAI, for example, or IRFC, for example, railways and roads. They are underleveraged at the moment. Both these institutions has enough on their balance sheets, which they can raise funds, so if necessary. So I think the government will go on that route after some time, keeping this at about 11 odd lakh crores, and raise funds if necessary outside the government balance sheet, through the balance sheet of these financial institutions.
Absolutely. So my last question, it's related to the fiscal consolidation part.
Yes.
4.9% fiscal deficit for the current financial year, targeting 4.5 for FY26. Now there are two aspects to it. For the medium-term path, they're linking debt to GDP ratio,
right,
instead of fiscal deficit. So can you explain this linkage?
Yes, of course. Yeah, of course. And I think if there's one thing I'm most happy about is this issue. Okay. So she's done just the right thing, which nobody does, actually. See, both are necessary. When you talk about macroeconomic stability, both are necessary. One is a reduction in the fisc, which I think there's been a lot of scope, and I think fisc to 4.5% over the next 1 or 2 years, I think is looking reasonable now. I mean, so that is one aspect of it. The other aspect which people don't speak about, because the whole world is in that direction, is the debt to GDP ratio. Now, we got to a debt to GDP ratio of 80%, basically during COVID and that period, etc., right? And the government is now actually giving a glide path to reducing it. I think this is the only government in the world which has given that. I mean, the debt, just to give you to contextualize it, the GDP to debt ratios are as high as 300% to 350% for some of the large economies, based on irresponsible splurging on populism and no fiscal prudence, and basically kicking the can down the road. This is what the large economies in the world are, and which is the root cause of all the problems. So we have chosen not to do this is a great feather in the cap of the Indian government. And this is the first time they are actually saying it, that we will also take care of the debt to GDP ratio. Right. So I'm very glad about it. Actually, both are necessary, and they will do it. Once they've said it, I guess they will do it. Yeah.
Right, sir. And very quickly, how much of this reduction in the fiscal deficit do you think is because of the one-time transfer from the RBI? I mean, this year it was huge, but probably
it was huge. Sure. Yeah. So look at it this way, Arjun. So irrespective of what many people have said, I don't think this is a one-time, at least for the next 1 or 2 years. And I'll tell you why. Because the treasury gains in the RBI balance sheet are large, are very large, because most of our deposits obviously are in dollars. And the US dollar is, the Fed is going to cut interest rates this year and next year. So the glide path there is a cut in unit rate. Now, if that happens, the bond deals obviously, go up significantly, and not the bond deals, the bonds go up significantly. And that is the benefit which you will get, because we have our largest amount of RBI reserves are in US dollars. So I think this treasury gain will continue into the next 1 to 2 years, given this fact. So therefore, I think it is not an unreasonable amount to say that 230,000 crores or thereabouts will come from RBI as dividends, as well as some other financial institutions, because of this treasury gains issue. So it's not a one-time. So I think it's reasonable. Yes, it's reasonable.
So that's it, Prabal sir. Thank you so much for your time. It's always a pleasure talking to you. And I look forward. Thank you, sir.
Thank you very much. Thank you, Arjun. Thanks. Bye.